Howdy there, folks. Welcome into today's video. If you are the type of individual that likes a lot of stock talk, I'm just going to say you've clicked on the right video. We've got probably 10 different stocks to talk about in today's video. There's so much happening in the market right now. We are in the heart of earnings season right now. The heart of earnings season is a time period in which there's so many companies reporting earnings day after day after day. It's hard to keep up with them all, okay? I'm doing my best out here. I hope you guys enjoy this one. We got so many stocks to get into, so many huge moves to talk about. What's going on here? What's the future of some of these stocks? Are they going to keep going up? Are they going to go down? We got, oh my gosh, it's just a lot. So yeah, I appreciate y'all joining me. Thanks for being subscribed. When the video's over, if you haven't got to check out my new workshop, definitely check that out. That's pinned comment down there, how I find 10x stocks, about a 30-minute workshop, okay? So where we're going to start out today's video is Elf Beauty. The stock is spiking huge after hours. I've seen it up as much as 17%. There's going to be a lot of talk about this stock's going to 150 now at this point in time. That's going to start building. This stock's done as tremendous even before the move that's going on after hours. We're already up 1,500% on this stock. Now, I'll be honest, every time the stock spikes, it is a very bittersweet experience for me. And I mean a very bittersweet experience. And if you haven't been watching this channel for a long time, basically I used to own nearly 10,000 shares of Elf Beauty. Stock went up a lot over time, and I took profits instead of just letting the baby ride like I should have done when the fundamentals of the company are just getting better and better and better. There's really no reason to sell other than, well, I made a lot of money, and so I'm like, oh, you know, yeah, I own 1,000 shares here today. So I'm prospering. I'm doing well, right? If the stock's up 17% tomorrow, I'm going to be up probably $20,000 plus in the stock. That's great, right? But on the flip side, if I held all the shares I used to hold in the stock still today, the gain tomorrow would be a six-figure, if not multi-six-figure gain tomorrow, okay, in one trading day. And so that's why it's a little bit of a bittersweet experience. Now, the numbers are shocking out of Elf. Absolutely shocking. The company came in with 76% sales growth. How many companies do you know that have grown revenue 76%? There's only one other company I can think of that's kind of growing in that category, and that is Avant and probably NVIDIA. NVIDIA is probably going to be 60% somewhere range of growth, right? But there aren't many companies in the entire stock market that are growing at this sort of level, right? 50% growth was expected by Wall Street, which is still an insane number. And they blew Wall Street numbers out of the water. I mean, it's not even close. If we look at this, right, and a lot of people wonder, like, is Elf even still a buy, right? Well, these numbers kind of tell you, like, the stock is actually still a buy, which is shocking. Net sales came in at $216 million, as versus $122 million at the same time last year. Cost of sales of $63 million versus $39 million at this same time last year, right? Gross profit came in at $152 million. $82 million was a gross profit at this time last year. Selling general administrative expenses that went up, but that's, you know, when you have revenue skyrocketing like it is, that's kind of expected, right? Operating income came in at $60 million versus $21 million in the same quarter last year. Income before income taxes, $59 million, and net income $52 million. That's versus $14 million at the same time last year. So we got revenue skyrocketing, we got margins continue to skyrocket, and we got net income going through the roof. They also just upped all their fiscal 2024 outlook. They're upping their net sales to somewhere roughly around $800 million now at this point in time. Adjusted EBITDA, $170 plus million of adjusted EBITDA, adjusted net income $125 mil to $127 mil, and adjusted diluted earnings per share of $2.19 to $2.22. From there, already had a pretty strong number, $1.73 to $1.76 now at this point in time, right? And it's been extraordinary. One of the frustrating things for me with Elf is it's a very lonely experience. It's very lonely. Not a lot of people own Elf stock. And it's just like, this is one of the most phenomenal stocks in the entire stock market, literally. And a lot of people just haven't even participated in this bad boy. And at the end of the day, it really comes down to this, right? You know, you look at something like this. Elf's obviously a customer that caters to females, right? And so, you know, a lot of people in the stock market are obviously men, right? If you watch my channel, there's a good probability you are a man between the ages of 25 and 54, okay? Let me know in the comment section if you're a man between the ages of 25 and 54. That's who's probably watching this video right now, okay? I'm going to have a few younger people that watch. I'm going to have a few, like, retirees and stuff that watch my channel, right? And I'm going to have some women that watch my channel, but it's a very small amount. And I can tell you, whenever I get recognized in public and whatnot, guess what? It's usually men between the ages of 25 and 54. They usually say hello. I think one time ever, a female came up to me and recognized me. One time, ever, okay? So that's what's going on. And so it just doesn't, stock like this just doesn't register with a lot of men. They just have totally missed this one because they're like, oh, it's kind of women. But I'm just here to tell you guys, some of the best stock market investing opportunities you will ever find in your life are going to be companies that actually sell to mainly a female customer base. And I want to take you guys through a few of these stocks, right? Ulta Beauty, this stock in the past 14, 15 years is up 5,000+%. Okay, that's a life changer. That's not just a stock that, did really well. That's a life-changing stock Ulta Beauty's been over the past 14, 15 years, right? Louis Vuitton, obviously their handbags, super high-end. They own all those luxury brands, and much of their customer base is females, right? Over the past 10 years, the stock is up over 400%. Not necessarily a life-changing stock, but damn, that's some pretty good performance. I can tell you, if every stock I own gets 400+% gain over a 10-year basis, I'll be a very happy camper. That is perfectly fine with me, baby, okay? My best dividend stock in my dividend portfolio, guess what it is? It's a company that sells to mainly female customers. Tapestry, okay? Coach, Kate Spade, Stuart Weitzman. It's my best performing stock. Not only do I make silly dividend money every 3 months this company pays me out, but I've also, just on the share price appreciation over time, made 236% on this stock, right? If we want to look at another one, oh, wait, no, that was about it, okay. I thought I had one more setup for you guys. So nonetheless, don't ever forget about many of these companies that have female customer bases as, a huge portion of their, let's call it customer base, because you're just going to miss out on a lot of opportunities out there, okay? And so I just always need to, say that, okay? Avant. Let's talk about Avant for a minute, right? This stock's roaring. I mean, the past month is up 90%. I think it's really two reasons. Earnings, obviously, is getting this company close to profitability, and obviously the revenue numbers are ridiculous for this company. I think that's definitely helped, but I do believe it's also we're going a little more risk on in the market right now. I'm looking at a lot of different stocks that seem like risk on, but a lot of people are wondering, can Avant keep building on these gains? Is it going to take a breather? Those sorts of things. The problem with Avant, okay, has nothing to do with their numbers. I mean, the numbers are extraordinary. The problem with Avant is it's such a small cap company. People start to build distrust because a lot of times they just release their numbers every 3 months. You don't get a lot of news from them. And so something the company's got to do better is keep investors up to date with what's going on in the business throughout a quarter. They should hire a social media manager that works part-time and you pay him, I don't know, 20, 25 bucks an hour or whatever, that can post pictures of the facilities and what they're up to and orders and what the product's looking like. And if they ever have any big news, in the middle of a quarter, around a new customer or something, announce that. Because at the end of the day, people just, want to see, information. To wait 3 months, that seems like an eternity in regards to stocks. They start feeling uncomfortable. You look at a stock like Palantir. Palantir, they do a big time, because Palantir is a big time company, right? Norton and the Avant team, they don't have to do this. They don't have to do press releases. They can just post on social media and whatnot and have up their social media game in a pretty substantial way, which I think needs to be done. But you look at Palantir, look at how often Palantir releases press releases around news, right? Palantir is one of the best companies in the financial markets about keeping the investors understanding what's going on, right? And also, remember, employees also read all this stuff as well. So employees get to keep up to date with everything going on inside the organization. So if I just had one piece of advice for Avant, other than getting that net income to consistently, positive numbers, it would be hire an intern, pay somebody part-time to come take some pictures and post on social media and keep everybody in tune. And also, they'll build more publicity the more they post on social media in regards to more customers around their brands and everything like that. So that's my opinion. That needs to happen there. And then we can talk about momentum continuing to build there and just investors feeling better, okay? AMD. So AMD reported after the bell. The stock is up. Now, when I show you these numbers, the AMD just reported, you're going to be like, how is AMD stock up? These numbers are, put simply, a dumpster fire. And if you are an AMD shareholder, you're going to look at these numbers and say, yeah, that's a dumpster fire. As an AMD shareholder, it's a dumpster fire, right? I don't personally own AMD, although I do think it's a great company. These numbers are awful. Absolutely disastrous, awful, okay? Revenue was down 18% for the company. Gross profit was down 19% for the company. Operating income or loss was down 104% for the company, which means they went from being very profitable last year at this time to now losing money on an operating loss basis, essentially, okay? That's insane. Like, you don't usually see a number over 100% very often. That's just sad. The net income is down 94% year over year. And those are all GAAP numbers, okay? Generally accepted accounting principles. Awful. Absolutely awful. But maybe their guidance was great. Maybe that's why the stock is up, right? They guided to $5.7 billion plus or minus $300 million. Okay, so $5.7 million is the number to keep in mind here. Well, analysts were expecting $5.8 billion. So that's a no bueno situation, right? That's no bueno. Like, the numbers are awful. The guidance is below what analysts have for the company. It's bad, bad, bad. But why is the stock up? Very simply, I'll put it like this, okay? 2024, the company is expected to get back to like 20% type growth, okay? And so everybody's looking past these really bad numbers right now, and they believe that in 2024, in future years, AMD's numbers are going to get much better. Their AMD chips, their AI-related chips are going to start selling really well in 2024 and moving into future years, and it's going to start generating big revenues again. The profitability is going to skyrocket. The margins will skyrocket for the company. So that's why everybody's looking past these really bad numbers in the short term, and they're saying, brighter days are ahead in 2024 and beyond. So even though these numbers are horrible, it's just getting all this bad news out, and then the story just going to get better and better as we tick along through the remainder of this year, and especially in 2024. Now, we've got to still waiting for that to play out, but nonetheless, investors are getting excited kind of ahead of time. Remember, AMD was all the way down to like $55 a share back around Q4 of 2022. So the stock's over doubled up now at this point in time. Now, when it comes to AMD, they're getting their lunch eaten in the short term by NVIDIA. NVIDIA is absolutely, if this was a fight, it wouldn't even be a close fight. Like, AMD would have been knocked out by now, okay? NVIDIA is blowing AMD away. AMD is shrinking their business while NVIDIA is putting up ridiculous growth right now, okay? So in the short term, NVIDIA is owning AMD. We'll see what happens long term. Maybe AMD can play catch up here and get into the AI market as much as NVIDIA is, but let's just call it what it is. AMD is getting their lunch eaten by NVIDIA right now. There's no way anybody could tell you anything different. The numbers are the numbers. So that's a very intriguing kind of story here. NVIDIA is just a better setup short term. AMD is a better potential setup long term because there's just so much bad news kind of already baked into AMD versus NVIDIA is obviously an opposite situation. So it's going to be a fun battle to watch as kind of the years tick on, okay? Now, Fubo. What happened here today with Fubo? Something extremely interesting happened here today with Fubo, okay? So Fubo's up 164% in the past 3 months. 3 months, 164%. Today was the day Fubo stock should have dropped big, okay? The stock right from basically the open of the market, it just dropped. And it bottomed. And then the stock, as the trading day went along, it just got stronger and stronger and stronger and stronger. This was the day the stock should have dropped big. I don't know if somebody knows something or somebody's just very hopeful in numbers. I don't know what's going on with Fubo, but it's acting strange, okay? Even prior to this, the moves were ridiculous past few months in regards to Fubo. Up, huge, down, huge, up, huge, down, huge. But I see something like this and I'm like, I don't know, man. With earnings coming this week, either somebody's just taking a big gamble or somebody knows something. It's one of those two scenarios. I just don't know which, okay? We'll see which on Friday. Friday before the bell, the company reports earnings, and we'll know if somebody actually knew something. They had a little tell, let's just call it that. Little birdies were talking about something, or they were just taking a huge gamble here and, But all I know is the buying pressure has been relentless in this stock, okay? So I don't know. We'll get to see very shortly here. Starbucks, really? They just reported earnings and the stock's moving 1%, one flip and flapjack in percent. Are you serious? I got to say, Starbucks numbers are extremely impressive, folks. Extremely impressive, okay? So check this out. So North America, very impressive numbers overall. Comp store sales were up 7%. Now, this is the one troubling thing, change in transactions. Transactions were only up 1% on a year-over-year basis. That smells like maybe competition a little bit, Maybe competition. There's a lot of coffee shops popping up all over the place. Obviously, I feel like Dutch Bros could be the longer-term major competitor to Starbucks in the United States of America. But every day I hear about it here in Vegas, like a new coffee shop opens up, and my wife's like, "Oh, you see that new coffee?" So I don't know. Okay, that's a little troubling. That's the one troubling number, one of the very few troubling numbers I even saw in any of Starbucks related numbers. Right, change in ticket up 6%, which you kind of expect in a higher inflationary environment. Right. Revenues are up 11%. Operating income, usually want to see that up roughly the same as revenues. So that was up 10%. That's good. Operating margin, kind of, we can call it flattish year over year. International numbers are simply shocking. Comp store sales up 24% on a year over year basis. Flip my flapjacks 3 or 4 times. What are we talking about here? Okay. Change in transactions up 21%. Change in ticket, surprisingly, only up 2%. That's interesting. Revenues up 24%. Operating income up 177%. Operating margin up over 1,000 basis points on a year-over-year basis. You gotta be kidding me, okay? You gotta be kidding me. The numbers overall, this is beautiful. I mean, if my companies can do this, I'd be very happy, okay? Total net revenues up 12.5%. Guess what net income was up? 25%, okay? 25%. So, and by the way, operating income up 22+%. That's amazing. Like, if you can grow your bottom line at a much faster clip than your revenues, you're winning. You're winning, okay? Incredible. But why is Starbucks stock down 1% after hours? Why is this stock not up big? I'll show you exactly why, okay? Starbucks trades kind of rich, okay? Based upon this year's numbers, expected numbers, they trade about 30 times. And based upon next year's earnings numbers, they trade about 25 times roughly. And remember, Starbucks is a company that they've built so many locations over time. Like, you could always find a new location somewhere for a Starbucks, but I'm just telling you, like, the big days of location growth are behind Starbucks now at this point in time. So where they're going to boost their revenue up, if they're going to boost their revenue up, is really going to have to come from existing stores and continue to put out great comp store sales quarter in and quarter out, year in and year out, right? And they're going to have to sell their customers more stuff, or they're going to have to raise the price of their product. So that's the one problem with Starbucks, okay? That's not a problem you had 10 years ago. That's not a problem you had 20 years ago. Back in those days, it was like Starbucks has so many locations to grow in the United States of America and international that it's just like the world is theirs. Now you look out, the location base is so big that the percent they're going to be able to grow locations over this next 10, 20 years is going to be very, very small. So that's a troubling thing. And obviously, like I said, in North America, I feel like they're going to have more competition than ever, okay? Now, while I was prepping this video, this news came out, breaking news, okay? This is one of actually 2 pieces of breaking news. One of them we're not going to cover because I don't want to get political, okay? But this big piece of breaking news came out. Fitch cuts U.S. rating to an AA+ from AAA, okay? Now, that could be a boogeyman in the market. That could scare some folks in a few different ways. Could spook the bond market a little bit. It could rally things like potentially rallying maybe Bitcoin and gold a little bit. Gold's a little more sophisticated market than like Bitcoin. So, it could potentially rally gold a little bit. But ultimately, I think it's more of a boogeyman than anything, and just one of those things that if the market shakes up, it'll just be an easy thing to pin it on. Like, oh, that's because Fitch downgraded the U.S. credit rating. So we'll see what happens there, okay? Caterpillar just busted through an all-time high, okay? The stock's tearing it up. I mean, absolutely tearing it up. The stock is up about 9% here today. And I said, I saw this move, and I was like, do they deserve that move? Okay. Look at the numbers. Revenue up 22%, operating profit up 88%, adjusted operating profit up 87%, profit per share up 81%, adjusted profit per share up 75, flipping flapjacking percent. I mean, it doesn't get better than that. It doesn't get better than that. So when I look at this, if this was all you told me, right, I'm going to say, yeah, the stock should be at an all-time high. Like, the numbers are disgusting. They're ridiculous. That's incredible, okay? Absolutely incredible. And you guys know, if you watch my channel a lot, right, this is where I live, okay? I don't live out in all this land, by the way. I wish I owned all that land right there, okay? That's one of the last little bits of land to develop, actually, in this dang area. There's not much land left to develop because we're surrounded by mountains here in Vegas. So, yeah, real estate, Next 10 years, baby, it's going to be a lot of fun. Next 20 years is going to be even more fun. You just need to not run out of water. But I told you guys, my whole damn city's under construction. My whole city's a construction zone. I can't drive in any dang street, any dang highway, without a million construction cones, without them doing this and doing that. It's impossible. It's ridiculous. The whole city's a construction zone right now. And I have a feeling, of course, Vegas is going to be on the more extreme side, but I have a feeling that many cities and states around the United States of America are massive construction zones right now, with the infrastructure bills, with the spending that's going on out there from the government side, the local side, everything that's going on. Like, this is a multi-year construction kind of boom we're going through. It's not going to last forever, but it at least has a few years to run here of major spend. And so during this time period, who's going to benefit as much as anybody? Caterpillar. Caterpillar is going to, if you're going to talk about one of the most direct beneficiaries of the massive infrastructure bill and the crazy spending that's going on over this next several years, it's Caterpillar. It's the creme de la creme. And so, don't be surprised if the company keeps putting up very strong earnings all the way up until eventually we'll either catch into a big recession or until a lot of the infrastructure spending starts slowing down, which is still several years away. So up until one of those two scenarios, don't be surprised if Caterpillar just keeps putting up insane numbers quarter in and quarter out. Remember, for them, it's new sales of different construction equipment, but also it's the repairs. These things break over time. Parts break, this breaks, and this needs to be fixed. So they make money off that as well. Okay. Now, I have at least 5 companies reporting earnings that I personally own over the next 48 hours. Okay. I have PayPal, I have Shopify, I have Qualcomm, I have Amazing's and I have Fubo. And not to mention the most important company that I don't own, but I have investments in terms of I own semiconductor companies that get significant amounts of their revenues from Apple, right? And that's obviously the big dog of them all that's really going to shake up the market over the next few weeks, either up or down, right? So this next 48 hours is very vital for me in terms of kind of where my portfolios are going. And, I'll say this, okay? If PayPal comes through and knocks out of the ballpark and that stock rolls and then Amazon does the same, there's a high probability I could bust through all-time highs in terms of the public account. Because now at this point in time, PayPal's a 6-figure plus position for me in the public account. Amazon's a 6-figure plus position for me in the public account. If Amazon and PayPal roll, it's likely going to pull Meta up as well, and Meta is the biggest position in the public account. That's pushing close to a $600,000 position now at this point in time. So if those two roll, they're going to bring Meta likely along with it, and then we could be talking about a new all-time high in the public account. But obviously, if they don't, then we won't. Which honestly, I'd rather have them go down than up. I mean, it would be cool to see the public account at a new all-time high, but honestly, PayPal I'm still a buyer of through the end of this year, if not into next year, and same exact story with Amazon. So I would rather have them go down. The more shares I can buy for cheaper, the better for me personally. So that's kind of where I'm at. It's a big next 48 hours nonetheless, folks, okay? Appreciate you joining me as always. Make sure you get access to that free workshop I put together for you guys, about a 30-minute workshop or so. That's going to be pinned comment down there. How I find 10x stocks. You should get some good value out of that. And best of luck with any of the companies that you own that are reporting earnings over this next few days. And obviously next week's another crazy one. Much love as always, and have a great day.